Good day, everyone. My name is Trevor Polischuk, and on behalf of OrbiMed, I'll be presenting to you today the Worldwide Healthcare Trust and the Biotech Growth Trust, primarily focusing on the exciting investment themes that we think will drive returns in 2023. First, allow me to introduce my firm to you for those who may not be familiar. But OrbiMed Advisors is headquartered in New York, and we're the largest dedicated healthcare investment firm in the world. We are global, and we invest across all platforms and all subsectors of healthcare. Together with the managing partner of OrbiMed, Sven Borho, I manage the Worldwide Healthcare Trust, while my colleague, Jeff Shu, manages the Biotech Growth Trust. And for those of you who don't know me, well, I've been a part of OrbiMed for over 20 years now, and I effectively wear two hats. First and foremost, I'm an analyst responsible for all our investments in large cap pharmaceuticals on a global basis, as well as Japan pharmaceuticals. And secondarily, of course, I'm a co-portfolio manager of the Worldwide Healthcare Trust. As a firm, we have 17 billion US dollars under management spread across public equities, private equities, and a royalty fixed income strategy. Almost 140 employees worldwide, and we're very proud of our human capital, with over 30 MDs and PhDs among that group. And you can see here where the Worldwide Healthcare Trust fits in, our flagship fund right beside the Biotech Growth Trust. And for comparative reasons, you can see a snapshot of the composition of the two trusts here. We consider the Worldwide Healthcare Trust a one-stop shop for everything healthcare, pharmaceuticals, including large caps, specialty pharmaceuticals, even generic drug makers, biotechnology, both large and small and in between, healthcare services, medical technology, life science tools, and importantly, emerging markets. Biotech Growth Trust, seen here on the right, is predominantly, of course, biotech, currently overweight small cap names versus large cap biotech stocks. My presentation today will predominantly focus on what we're excited about for 2023, perhaps with a slight bend to biotech, so that I may talk about both trusts at the same time. Today, I'll discuss with you 5 major themes for 2023, including drug pricing, M&A, especially in the therapeutic space, biotech and valuation, innovation, and discuss a little bit about our catalyst-driven strategy. And as you can see here, I have a host of topics to review, so let me begin in earnest. To start off, perhaps the biggest overhang on the sector has finally been lifted. Yes, drug price reform in America has finally happened. And this has been an overhang on the group really since early 2021, really since Joe Biden took the White House and the Democrats gained control of Congress in the January of 2021. Really, this has been an overhang that has been coming and going for nearly the past 30 years, quite frankly, really since Bill Clinton came into power early in the 1990s. But finally, something was signed into law late last year called the Inflation Reduction Act, also known as the IRA. And while this outcome was somewhat controversial, there was a real mix of positives and negatives for the industry. But overall, we think it's very manageable, with the most scrutinized part of this law, which is drug price negotiations, not coming in effect until 2026. I could go into a lot of detail here, but in the interest of time, I will not. So I'll just conclude that the IRA, in our view, is workable. Perhaps the biggest positive is that this headline risk is now behind us, that the fear of drug price reform has totally dissipated as an overhang in the group, which has been really good for the sector. Another critical theme for us with both trusts is mergers and acquisitions. Why is that? Well, because of what you see here in this slide, large cap pharmaceutical companies are facing another large patent cliff, very reminiscent of what we saw in the early 2000s, but this one starting in 2025 and proceeding to the end of the decade. A number of major blockbuster products will be losing their exclusivity, and sales will erode substantially through generic alternatives. Up to $250 billion of branded sales are up for grabs, leaving major gaps in revenues and earnings for a number of these large cap companies. A key strategy, of course, for these companies is to address this through M&A. And we've been hearing from large cap executives all about business development since early last year that we want to do deals. We have to do deals. We have the cash to do it. We have the balance sheets to do it. And they actually all acknowledge the patent cliff in 2025 and beyond. But finally, all of this action all of this talk is turned to action. We have finally seen a real inflection in M&A over the second half of 22 and to start 2023, turning the fiscal year that we just closed into one of the best years for biopharma M&A history after one of the quieter periods in 2021. And you can see here, the number of deals has almost doubled and the deal value has almost quadrupled. And we think there's much more to come. This slide highlights 15 distinct mid-cap biotech companies, each with a late-stage asset across a host of different therapeutic categories, which end-user sales could surpass $60 billion in combined sales into the next decade. And this is across a host of therapeutic areas, as I mentioned. So this gives you a flavor of what companies may or maybe should be shopping for. And this has been a real rallying point for the industry, especially in biotech. As we've seen in the past, M&A can float all boats. And that's exactly what we've seen this far. This inflection of mid-year M&A in June of 2022 has pushed small cap biotech finally off the bottom. And the XBI has moved as much as 50% off of its lows after the largest and longest both absolute and relative drawdown in biotech history. Although we've seen some recent volatility, of course, Silicon Valley Bank, for example, there are signs that we are past the turn. Valuations have really moved off the floor, as this slide shows here. And excitingly, we think we have a long way to go. And there's precedent for this. Historically, whenever we've seen these macro-driven or fear-driven material drawdowns, they've all been invariably followed by very strong, sustained recoveries. And biotech remains cheap. This chart shows the relative cash on biotech balance sheets relative to their market caps. We're basically at all-time lows here. But like I showed previously, it looks like we're finally moving off the bottom. And this is another slide that shows how valuations have come in on small cap biotech stocks compared to, say, large cap pharma valuations. But again, we believe we're off the bottom. So for example, at the height of the biotech valuations, the entirety of the biotech mid-cap space was worth more than J&J, the largest US healthcare company. But by the bottom, in June of last year, mid-cap biotech was worth less than the smallest large cap company in the US, Bristol Myers Squibb. And now, at the end of last month, we've seen that moving higher. So what else drives these stocks higher? Simple: innovation, which I think is the real pillar of our positive investment stance in healthcare. And pipelines are full. In fact, they're the fullest they've ever been, as shown by this chart, even if you exclude all of the COVID-related development that is ongoing for the last 3 years by this industry. And this slide shows some of the areas we're doing some of our current deep dive work, trying to identify what we're looking for as the next big thing, including oncology, obesity, and perhaps what we call the holy grail of pharmaceutical development, Alzheimer's disease, where we just had another positive trial readout just a couple of weeks ago, in this case from Eli Lilly. And I know obesity has been a hot topic for good reason, but the companies there are already working on next generation combination products, and we'll see proof of concept data later this year. And the revolution in the treatment of cancers, well, that just keeps coming with the next generation of immuno-oncology agents, targeted therapies, and antibody drug conjugates. This slide shows what we call the changing of the guard for the best-selling drugs in the world. Today, we have about 10 medicines that sell over $10 billion globally. This includes the COVID-related products. But due to normal losses of exclusivity, and patent expirations, they will no longer be at the top of this list come the end of this decade. But I'm very confident to say that given the innovation in the sector, there will be a host of new and exciting products that reach this mega blockbuster status before the end of the decade. And really, this chart also shows that part of the divide in the large cap names, the haves and have nots, if you will, and many of these companies comprise significant positions within the portfolio. And actually, in fact, if you look down the right side of this slide, almost all of them are in the portfolio. We have key investments in Novo, Lilly, Daiichi, AstraZeneca, Sanofi, Eisai, and even Biogen as well. Another new theme for us that we're focused on in 2023 is our catalyst strategy. And this is where we pool our scientific acumen from across the entire firm and attempt to ascertain which assets in human trial development can turn into successful new blockbuster medicines. And this skill set is really truly embedded into the DNA and human capital of our organization. And with the inflection of M&A, we have seen this before. There's renewed appreciation of the catalyst strategy as investors are reminded of why companies are being bought for 100 or 200% premiums, because they have exciting new drugs in development. And this slide shows a handful of these catalysts from the second half of last year, in which investors were either negative or they flew under the radar screen. But in each case, these stocks moved materially higher after each catalyst was positive. Again, including Alzheimer's disease from Eisai and Biogen in September of last year. And like I mentioned again, with Eli Lilly this year. So in 2023, we expect investor focus to return to these types of catalysts, like in gene therapy. This is a highly scrutinized space that was left for dead in 2022 due to emerging safety concerns. But suddenly, as depicted here, we have 3 new gene therapy approvals looming in 23, which will more than double the total number of approved therapies in Western markets. And Sarepta just coming off of a positive advisory committee at FDA as leading this pack. And there's a plethora of additional catalysts in biotech in 2023 as well, across oncology, nephrology, neurology, just to name a few. In fact, in the Worldwide Healthcare Trust, we created a swap of a basket of actively managed catalyst-rich companies to increase our exposure to some of the highly anticipated events in 2023, which we can buy outright in the Biotech Growth Trust. And positive outcomes will dramatically affect the valuations of these companies, or even perhaps they get taken out, like Bellis did by GSK last month. And this can also include large cap pharmaceuticals as well. Finding a single catalyst to move a large cap stock is hard to do, but there are a handful that could do that, such as Novo in obesity. And I've talked a lot about that. Daiichi and AstraZeneca in oncology. Even Roche is developing a next generation immuno-oncology agent that we should have data perhaps this summer on. And 2 catalysts that we've had on this list have actually already occurred, and both were positive, and both stocks inflected materially. This includes Sanofi and a new indication for their already mega blockbuster product, Dupixent. And this was in a disease called chronic obstructive pulmonary disorder, which is more commonly known as smoker's cough, and that was positive. And like I've mentioned, because we're very excited about it, Lilly and Alzheimer's disease with an antibody that could be the most efficacious yet. And all of these companies are reflected in the portfolio. And even in medical technology, we have some new or refreshed technologies that could move these stocks as well in a catalyst-driven fashion. One I would mention in particular is Intuitive Surgical, the robotic surgical maker, and the Da Vinci surgical suite. The company was expected to perhaps release their next generation product earlier this year, as early as March. That did not happen. But the company subsequently has hinted to something will happen, perhaps soon, perhaps early next year. But we're very eagerly awaiting one of the best kept industry secrets at Intuitive Surgical. So let me wrap up here and just discuss some of the things that I reviewed in this presentation. First and foremost, we're going to continue to invest in innovation across the Worldwide Healthcare Trust and the Biotech Growth Trust. It is the key driver of value going forward. Key overhangs have lifted for the sector in terms of politics and drug price reform. We expect M&A to continue. We're going to continue to focus on our catalyst strategy. And really, let's be frank, this is a great entry point for biotech. Valuations are undemanding, and our overall bullish outlook supports our playbook for 2023 for both trusts. Thank you for your time, and hopefully we can chat again soon. Cheers, everybody.